Welcome. Today, we're diving into the VTI ETF, or the Vanguard Total Stock Market ETF. This fund, managed by Vanguard, provides exposure to the entire U.S. equity market, including small, mid, and large cap growth and value stocks. It's a popular choice among investors looking for broad exposure to the U.S. stock market at a low cost. VTI aims to track the performance of the CRSP U.S. Total Market Index, which represents nearly 100% of the investable U.S. stock market. Let's discuss some key features of VTI. First, it has a very low expense ratio of 0.03%, which is significantly lower than the average ETF. Second, it includes a wide variety of stocks, providing diversification across all sectors of the U.S. economy. Third, it's passively managed, aiming to replicate the performance of its benchmark index rather than outperform it. Lastly, VTI offers high liquidity, with an average daily volume of over 2 million shares, making it easy to buy and sell. VTI's pricing is straightforward. It's traded on the NYSE Arca, and its price fluctuates throughout the trading day, just like any other listed security. The price you pay or receive can therefore vary based on the market conditions at the time of your transaction. It's worth noting that Vanguard doesn't charge a commission for online trading of their ETFs if you're a Vanguard brokerage client. So, who should ideally use VTI? It's an excellent choice for long-term investors seeking broad exposure to the U.S. equity market. This includes individual retirement accounts, IRAs, 401k plans, and taxable brokerage accounts. Moreover, it's suitable for investors who prefer a passive investment strategy and want to minimize costs. However, it might not be ideal for those seeking to outperform the market or wanting specific sector exposure. Now, let's talk about the advantages of VTI. First, the broad diversification reduces the risk associated with individual stocks. Second, the low expense ratio helps maximize your returns over time. Third, the fund's high liquidity makes it easy to trade. Lastly, the passive management strategy ensures that it closely tracks its benchmark index, providing a reliable investment performance. Of course, there are also some limitations to consider. First, VTI doesn't offer exposure to international stocks, limiting your global diversification. Second, its broad market approach means it lacks focus on any specific sector or style. Lastly, as it's market cap weighted, the largest companies can have a significant impact on its performance. Our key takeaways are: VTI provides broad exposure to the U.S. stock market at a low cost, making it ideal for long-term, passive investors. However, it lacks international exposure and specific sector focus. Considering its advantages and limitations, it's crucial to evaluate whether VTI aligns with your investment goals and risk tolerance. In conclusion, VTI is a robust ETF offering broad access to the U.S. stock market with a low expense ratio. It's a great tool for diversification and is suitable for long-term, passive investors. However, it might not satisfy those seeking international exposure or specific sector concentration. As always, it's essential to understand your investment needs before making a decision. Thank you for watching. I hope this analysis of VTI ETF has been helpful. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more investment insights. Remember, investing is a journey, and we're here to help you every step of the way. Stay tuned for more.